Topic 1. Volatility in bonds, yields, and equities. Markets showed sharp volatility in bonds and yields across the US, Europe, and Japan, driven by renewed Iran-related geopolitical risk, central bank signals, notably the upcoming Fed minutes and US Treasury liquidity actions, which together pressured equities and caused rapid swings in long and short-term sovereign yields. Geopolitical tension over Iran lifted oil price risk and safe haven flows, amplifying long-term rate moves because higher oil can feed inflation and therefore higher rates. With investors awaiting the Fed minutes, the market was splitting probabilities for September policy, roughly two-thirds for a pause, one-third for a hike, leaving short-end yields sensitive to any surprise in the minutes. The Treasury's expanded buybacks eased some long-end stress and pushed 10- and 30-year yields lower in the short term, but the interaction of geopolitics, inflation expectations, and central bank policy keeps volatility elevated. Topic 2. Technology, robotics, and SMRs. Unitree's sensational Shanghai listing and other robotics developments highlighted a surge of investor interest in humanoid and quadruped robots, even as commercialization and sales remain limited relative to valuations. Samsung's Foundry raised prices for advanced nodes, SF4, SF5, by roughly 10 to 15% in some regions as AI-driven data center chip demand tightens capacity and gives Samsung pricing leverage versus TSMC. Small modular reactors, SMRs, are attracting renewed attention as a potential way to meet rising power demand for AI data centers and electrification through factory-built, repeatable designs, but they face supply chain, manufacturing scale, and cost-proof challenges. Across these areas, success depends not just on product innovation, but on manufacturing scale, ecosystem build-out, regulatory frameworks, and supply chain readiness. Topic 3. U.S. Treasury doubles long-term buybacks. The Treasury announced it would at least double the size of certain long-term buyback operations, targeting the 10 to 30-year range, raising per-operation amounts from about $2 billion to at least $4 billion between Sept 9th and Nov 4th. To shore up liquidity. The move aimed to counter a buyer's strike, calm excessive selling in long maturities, and bring down sharply rising long rates that had reached multi-year highs. Markets reacted with an immediate drop in long yields, equity futures strength, and a softer dollar. But critics warned the measure is a temporary liquidity fix that does not solve underlying inflation, supply, or fiscal pressures. Some see risks to policy credibility and potential conflict with the Fed's inflation fight. Others regard it as a pragmatic step to stabilize market functioning in the near term. Topic 4. Disney ABC sues the FCC. Major antitrust trial against Meta begins. Disney sued the FCC in D.C. federal court after the agency ordered early license renewal filings for 8 ABC stations, a move Disney calls retaliatory and an abuse of administrative power tied to recent investigations and political criticism. Disney seeks an injunction and fast review, arguing the FCC's timing and scrutiny threaten free expression and impose special burdens. The FCC defends the action as rooted in broadcasters' public interest obligations. Separately, a landmark multi-state antitrust and consumer protection trial against Meta began, with 29 states alleging the company engineered addictive features for teens, illegally collected data, and misled consumers, seeking massive fines and structural changes. The trial will probe internal Meta documents and witness testimony, could require product changes like limits on infinite scroll and targeting, and may reshape legal and regulatory approaches to social platforms. Topic 5. Trump pauses planned 50% tariffs on Canadian goods. President Trump announced a pause on a planned 50% tariff on a broad range of Canadian products, pending finalization of a deal reached after last-minute negotiations. The pause was presented as temporary